Deepak Shenoy is also joining us on the show. Deepak, help us with your take on the markets, because given that we were just having mixed cues when it comes to the macro data, and we were heading lower. But given that today's fall, is it also surprising for you? Because even the large cap names are falling anywhere between 4 to 5%. So how scary is this fall for you, or you believe that this correction was anywhere warranted?
To some extent, I think it gives you the reiteration that stocks are volatile. Stocks have not been volatile for the last 2 or 3 years. I think to that extent, we're seeing that volatility come back. Big sharp down days like this are relatively good in the longer term for markets, because when you get these the capitulation, the forced selling, if you may, sometimes, or the selling because there's extreme leverage or anything like that happens. We don't know what's actually happened. Of course, nothing really has changed fundamentally, but I think, are seeing a lot of expectations or a fear of the uncertainty that a U.S. presidential change, which will happen next week, will bring along, and so on. I think this is one of those times when a lot of market activity is on. I believe that this volatility is good for us. It's already brought in a lot of stocks that perhaps come down into buying ranges. Even the blue chips are not safe. Markets like this are not. You cannot say that, oh, your my stock fell only 4% when your stock fell 6%. That doesn't give a lot of solace to investors. But I think you should look at it at a longer term. If you're getting such corrections, there will always be stocks that sell off for more than they should actually. They become even more value at some point, and therefore those opportunities give you something to look forward to for a next 3 or 4 year kind of investment. I think it's a good time to start looking more seriously at stocks which you thought were expensive in the past, and maybe now have come into your buying ranges.
So, Deepak, quite curious to know what's the shopping list looking like for you?
I'm still actually quite bullish, Aisha, on defense, on infrastructure, Indian infrastructure, on the financialization tools. So whether it is companies in the financial market spaces providing services directly to customers or providing services to brokers and intermediaries, I think those continue to be in our radar. We're also interested in domestic consumption. The consumption plays have relatively been more expensive. I'm not talking about FMCG, but I'm talking about more branded consumption, if you may, or higher end consumption, not biscuits and the like. But also, I feel that the import substitution, energy independence kind of theory will start to play out in the next few years. You're going to get a lot more companies manufacturing in India. So the manufacturing companies which have fallen, I think many of them are in very reasonable ranges now. So we should, we've been starting to buy more in the last few days. So corrections like this are always a little welcome in that sense.
Sure is. So let's pick up on the themes that you just talked about, Deepak, because you said defense as well as manufacturing. Manufacturing, the large umbrella that it is, where exactly are you finding value now?
So there are some companies which are auto ancillaries, because that is one of the largest things where we have a really good top to bottom kind of supply chain in the manufacturing part of the industry. Defense is relatively new, so a lot of manufacturing companies in the auto space or providing services to the auto space are actually diversifying into defense. But there's pure play defense companies as well, whether it's data analysis companies or small manufacture equipment manufacturers and so on. There is actually, I think the government has not really spent a lot of the money that it was supposed to this year, and perhaps that money will get spent in the next few months or in the next financial year. Either ways, the orders should start to flow into these companies, and the scope is where they can grow 5x and 10x in the next decade, rather than the relatively small growth that you'll see in the, say, banks or some of the IT service companies. I mean, the growth there is there, but it's much smaller. So I think the manufacturing plays here, and even people who are making tools that help other companies set up manufacturing plants that are providing B2B kind of products are also on our radar. A lot of these are relatively small companies, so the kind of scale that they can see if they were just to get 2x or 3x their businesses, the economic leverage that they can see is quite substantial. Our companies have very less leverage, for the most part, other than the NBFCs. So we don't have a debt crisis, and you don't have the issue that companies will go insolvent. All corrections are opportunities because a company that has a solid balance sheet has the ability to leverage itself to recover much faster from a downturn. But it's not an economic downturn, it's just a market downturn, and I think that's fine.
Quite interesting to note that you are finding value in some of these auto anchors names, but can we be more specific here? Any name that you can help us with that is on your radar where you are finding value at this point?
So, I mean, of course, we end up buying these companies, so I'm not necessarily unbiased here. But I'll shy away from stocks where actually, starting to pick up because it doesn't serve us well. But look at the top, even in a company like M&M, though it now has plays in defense as well. It has plays in IT services. It also has the large auto manufacturing area. I think there is a lot of scope for this as a group, not just as an auto company, and therefore I still find it reasonably valuable from that perspective for longer term. So I'm locking 5 or 10 years that they will do considerably better than they are right now. There are a few other companies. I won't take too many names right now. Some of them are smaller caps. They're scary because you'll find them fall 8 or 9% in one day and go up 8 or 9% the other day. But I think companies in this space will find the opportunity, and they're not necessarily only auto ancillaries. They will be companies that supply to the manufacturing chain. Companies manufacturing in the auto anch space, maybe the pistons or gears and so on, or companies in the engineering space. And one of the names I can give you is Alicon, for instance, which we owned for a while. And it had gotten to a point where it was a little expensive, and now we find it much more affordable for the long term. They have a little bit of defense as well, but they also have traditional manufacturing. They've supplied to other manufacturers. So I think companies like this is where my interest is, at least for now.
Silicon Engineering, that's the stock that Deepak just highlighted. If we can just bring that up. Deepak, hold on to that thought. A lot of interesting takeaways that you've given us today. But I think the other thing which is crashing with equities is also the currency. The fact that we're already higher than that 86 to the dollar level already, that also has a huge amount of bearing on the way equities, I guess, across emerging markets are also panning out. 86.50 now, actually, so that's a fresh record low. I'm going to quickly take it across to Nikunj as well and help him analyze the market fall today.
So, Aisha, it is nothing short of a perfect storm, and a lot of things actually have aligned against us. If one really looks at the global setup, it is a combination of dollar index, rising yields, and the fact that flows are moving out of not India but emerging markets, including China. So what was supposed to be a consensus trade that money will come back to emerging markets come 2025, that has not translated into reality, which in a sense is having an impact at the global level. So that's the global setup for you, where just about every emerging market has started correcting. Some of the popular markets like India, that's where the gains are the highest in last couple of years. So I guess they are the ones who have fallen the fastest. Now, how long will this interplay where everybody is hiding into the dollar, or this excitement ahead of Donald Trump inauguration, how long will this last? That's anyone's guess. But my sense is that this is becoming more like a crowded trade, and crowded trade, they seldom last beyond a point. So I'm not saying we are at a point of climax in the global market, but the risk reward ratio now to perhaps buy anything which is largely dollar denominated at these levels clearly cannot be made. So on global level, while the screen is not looking all that exciting, you need to start thinking that how long will this weak dollar interplay will continue. Second is rupee. Completely contrary to what everybody was anticipating and expecting. Rates were supposed to come down globally. Rates were supposed to come down in India. India's core fundamental, which for rupee to deteriorate, it's a combination of macro and micro. The micro has been slowing down and the macro has been stable considering where the fiscal deficit is, where the high frequency data point is. But the fact that flows are gravitating out of India, Reserve Bank of India's forex reserve has used the forex reserve, that is not helping the currency either. But the problem, Aisha, today for the market is not global or currency. I think it is a breadth of the market where mid and small cap stocks are really on the butcher block. And that's where I guess the problem has come in. We must bear in mind that while we may look at today's fall in isolation, or we can add back last week's volatility and say that, okay, this looks like a very, it is a scary number to look at when you look at the magnitude of the fall. But this is something which I think markets have periodically told us. The same PSU stocks which had no sellers today are finding no takers. On an average, the decline in PSU stock is more than 35% for these stocks which have appreciated or which had appreciated by 3 to 4 times. So excesses in the market, I think, they're getting out. The HNI and the ultra HNI community, which in a sense was in a mood to only buy and buy and buy and never sell, suddenly is selling without thinking. So there is, I won't use the word panic, but there is definitely a lack of participation which is making the markets look hollow, and markets today are falling on low volumes. Now, where do we go from here, Aisha? I think that is the most important thing. And I think there is no easy answer. I can stick my neck out and say that last 3 years, we've had a setup of low volatility and high returns. I think we're entering into a setup of high volatility and low returns. To make a case that, okay, we are nearing any kind of a bottom, it would be very early. However, to make a case that, the bull market is all over, I think that's foolish. What you need to do in this market, Aisha, is that ask yourself that why you own that stock and what is your time frame. If you keep your return expectations low, extend your time frame, and if you know what you've bought, I think you'll survive this. But if you own something which is in leverage, if you don't know why have you bought it, and if expectations are that, oh, you bought the stock and you'll make 50% return in next 6 months, I think that's a silly and foolish kind of return expectations. So what will save you in this market is your identification of the stock, your ability to hold it for next couple of quarters or maybe a couple of years, and then keep your return expectations low and understand the business which you own. If you put these filters, I think this would be a passing correction. It's not for the first time in this bull market also, Aisha, we've seen this correction. 2022, we saw this kind of a correction. Before Ukraine and Russia crisis, after the crisis, we saw this kind of a correction. We've seen this correction, I think, same time in March or April also, where the mid and small cap stocks, they came and they really got chopped. So it's not that it is game over for the bulls, but yeah, there is definitely a lack of momentum. There is lack of participation. There is no real compulsion for anyone to buy, and that is the ugly part of the market. When the going is good, you get blinded because of the momentum, and when the going gets bad, I think you get blinded by what the opportunity is. So that's my limited point here, that if you don't know what you own, I think it's a bad time to own those stocks. Increase your risk horizon and then keep your return expectations low. Jayesh Mehta also joins us. Jayesh, nice to have you back on ET. Thank you for joining us. Jayesh, what's happening to the rupee? Can we only blame it on the dollar?
I think you summarized it pretty well, right? So it's all about everybody wants to sell all other currency, all other markets, and invest in US. I think there was an expectation come January, come 25, we'll have fresh allocation coming to EM. But sorry, that didn't happen. And that momentum for US only, and that is continuing. And I think for us, as you said, macros are still good. But on a micro, I'll also touch upon, FPI selling is also dollar outflow, right? So we don't have that much of depth in the market. If we have daily outflow of $300 to $500 million for FPI withdrawing that money, that will be, of course, in a global dollar strengthening market. You will also have traders coming in to take along with that side. So all that put together at this juncture, it's not only us, other currencies are also impacted, but we are impacted more because we kind of remain very tight when the initial outflow happened in August, September, October. So kind of at that particular period, we were, rock solid while others were depreciating. So I think we had to have that catch-up game, which has happened. And as you said correctly, we don't know when it will change. It's a question right now. The consensus trade is to basically every other market bear. It's only U.S. market. I think at some point of time it will change, and that's when we might start seeing at least, if not new inflows, but at least the exits once they start stop. That's where the currency will stabilize. But till that time, I think it will continue, and I don't know how long, right? Unless we and there's nothing right now in this global environment you can take a major drastic step as an independent country. So from that perspective, it's quite challenging. We'll have to wait for how the U.S. strength kind of goes through. But as you said, like till the election, maybe momentum following after that. So we will have this pain at least for another 20 minutes, 20 days or so, and then we don't know. It's a hope trade that, okay, maybe the world will kind of realize that it's not only the US market, other emerging markets are also worth investing, but it's just a hope as of this juncture.
Yeah, seems to be the case. But Jayesh, that's exactly the point that I wanted to talk about. Do you not think that the RBI will intervene at this level, or can they even do anything to try and arrest the fall of the rupee?
So even if they intervene, right, that would be a temporary blip, because you see right now the move towards U.S. dollar strengthening, right, and you see in our normal flat market, what happens is only the outflow which materialize, right? So if an FPI sold say $500 million, so that's the money which is going out. But when you have a momentum going with U.S. strength, and when you see that there is an outflow in India, there are other traders globally in the NDF markets and others. They will also play with the momentum, right? So it then for a central bank to control that kind of momentum becomes difficult. But yeah, if it is just to manage a $500 million or $1 billion or a couple of $1 billion outflow, that can be managed. But how do you manage the sentiments where it's all about dollar strengthening? So that's where the momentum is right now. Till we see some momentum change there, or unless we see a drastic fall and then intervene big time by RBI and bring it down dramatically. So that does hurt people, but these are all temporary measures, right? So the reality is, as long as we have equity outflow happening, which is a dollar outflow from the country, we'll have to wait and watch how it falls further.
All right, so we need to wait and watch at this point in time. But with this, Mr. Mehta, we'll let you go on that. Thank you so much for taking the time out and speaking with us. So definitely fresh record lows coming in for the rupee. That is something that we are waiting by to see as well. But given the markets, is some hopes on the recovery. It's some mild recovery that we are seeing from the day's lowest point for Nifty as well as Bank Nifty. But no major change in some of the gainers when it comes to the Nifty 50 movers at this point in time. But with this, viewers, we'll just slip into a very short break. Don't go anywhere. We'll be right back and take the market discussion forward with all of our experts. Welcome back to the closing trades, and we do have two of our guests as well onto the show. We have been joined by Vinay Rajani as well as Deepak is also with us. And Deepak, I just wanted to have a sense on all these large cap and especially the OMCs, the fall in the OMCs that we are seeing at this point in time. Definitely the crude is on the boil, but there were some hopes that given the earnings season, there could be some respite coming in on the BPCL as well as HPCL numbers. So Deepak, help us with your understanding on the OMC basket at this point in time, and how are you placing your bets within the oil and gas space?
So we have Reliance, so I'm biased a little bit on that side. But I think the HPCL, BPCL, like the combine is actually stressed right now, I think, because of the crude price, both in the dollar rise compared to the rupee and effectively crude price increases. But I think this is relatively shorter term or shorter lived, because the US is likely to become a fairly large exporter of crude oil. So we are likely to see prices stabilize across the board once Trump comes in, because I think they're pushing for a lot more of the fossil fuel based energy generation anyways across the board. I think that is going to be That's going to be beneficial for India in the longer term. However, right now you're going to see this fall happening regardless of fundamentals. I think a lot of it is just liquidity driven, and therefore, even though these companies like HPCL, BPCL are relatively fairly valued and have been even before this, I don't think they're going to see any kind of a respite just because they announce a dividend or something like that meaningfully. At some level, they will suffer from the liquidity going out, and therefore their stocks also suffering. So I think they're interesting plays. They're not very good growth stories. They're mostly dividend plays for it, and we have not even seen those dividends happen in the last year or so to a meaningful fashion. So let's hope that the results then they come this time will show something positive. But we don't have any positions here. I have a position in Reliance, but that's not related to oil and gas. It's more related to their geo and retail arms and the potential demerger in the longer term.
So did you add any more to Reliance, Deepak, at 1200 thereabouts?
Yes, we've been adding to it for a while. I mean, it's a broken record. I've been saying this for a long time, but I think I'm still on the wait and watch mode. We're building positions even now. Not afraid to say that it's been a long wait, but I don't think this company is going. It has a lot of levers for it to benefit from India's growth. And if one or two of those levers really work, you can see a much bigger economic result for this company.
Yeah, you've been patient with Reliance for quite some time, and it is one of those stocks, right, which tests your patience for many, many years as well. But Deepak, earlier you were talking about consumption X staples, of course. What within consumption is looking attractive right now? Would you play it via realty? Would it be via autos? Would it be via retail? Hospitality, aviation, because consumption again is a very large umbrella.
So two areas here, Aisha. I think hospitality slash tourism is one of our longer term focus areas, because I think India is just getting to a point where people are eager to travel. We don't have enough avenues. I'm sure there's just so many things that form parts of our tourism, and whether it is religious or whether it is just leisure, the venues are there, but the hospitality options are limited. So I think there's a large scope for growth in these areas. We're seeing large ticket fares both on airlines and even on the train occupancy rates and so on. I think there's a lot more that will happen in that front. There's also auto. I think auto has been lagging for about 4 or 5 years in terms of the pickup for new cars. We haven't seen that happen for a while. Something was moving forward in two-wheelers, but even that has kind of slowed down. But I think longer term, we will kind of come back and we will see a significant growth in both two-wheeler and four-wheeler passenger vehicles. I think that part continues to be one of our driving forces, but also interesting long-term brands as well, whether they are some of them, some part of healthcare is also unfortunately or fortunately a consumption issue now, because a lot of discretionary kind of usage of hospitals happens. It's not just emergency. So there is a part of that also forms, into the consumption phase, including diagnostics, including hospitals and so on. So I think these are areas where I think India is going to see a lot more. There is, of course, brands. We haven't seen that many brands come out of India meaningfully, but you're seeing a Bikaji start to list. You might see some of the other brands start to list. Those are all interesting brands. They've been very expensive. Hopefully now we get a chance to enter as well.
All right, Deepak, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us, and also help us understand and spot some of the themes that are looking attractive at this point.